China continues to lead the way globally in producing and selling new energy vehicles. The trend has spurred a six-fold increase in related insurance premiums for this segment in just the past 5 years alone, according to a new AM Best report. I'm Lori Chortis for AM Best TV, and we're joined now by Aaron Lee, one of AM Best's Hong Kong-based analysts who helped author the report. Aaron, can you explain what's behind the growth in new energy vehicle insurance premium and quantify this sector's growing presence with respect to China's overall motor insurance segment?
Yes, of course. Thanks for the questions. I think the growth in new energy vehicle NEV insurance premium in China is driven by the rapid consumer adoption of NEVs, which stimulates the demand for insurance coverage. As we know, China has been leading globally in producing and selling NEVs with supportive government policies, increased demand for sustainable transportation, and technological advancements. Some institutions projected that the NEV sales in 2024 will reach a record high at 11.5 million in China. That is more than 37% of the total car sales already. With the strong NEV sales growth, we've seen that the NEV premium in 2023 has also surpassed US dollar 13.8 billion, rising more than six-fold from 5 years ago. As of 2023, NEV premiums already represent 11.5% of total motor insurance premium size, and we expect the momentum to continue and be a key element of future market growth.
The report notes some variation between the larger insurers in this new energy vehicle segment and the remaining carriers. What did the research determine with respect to companies that have a greater scale of business?
Yeah, actually, in the traditional motor insurance segment, the larger players have built up their economic moat over the years. As mentioned in our report, the big three companies in China have been delivering constant underwriting gain over the past 7 years, whereas the rest of the market were actually making a loss. Entering the NEV era, we expect the larger players to keep their advantages in terms of strong distribution network, high quality of business, and also their higher ability of operational efficiency.
How key were the related motor insurance reforms implemented in 2020 in terms of how these affected the new energy vehicle carriers?
Yeah, that's a good question. I think for the reform in 2022, it does has a significant impact on the overall landscape of the motor insurance market. The intention for the regulator, I would say, to introduce the reform was to optimize the cost structure of motor insurance, increase the coverage, and also try to lower the overall premium levels. This had led to a lower expense ratio, however, higher loss and combined ratio in 2021, as shown in our report. While we see some ease of capital requirements by the regulator recently, for example, lowering the risk charge for motorline for small-sized insurers, we still view that there will be ongoing pressure on the profitability for insurers if they try to enter the NEV segment, as currently the loss ratio for NEV insurance is about 10 to 20 percentage points higher than the traditional insurance.
Aaron, what conclusions did the report lead to with respect to new energy vehicle manufacturers and their potential role in China's insurance market going forward?
Yeah, I think we have seen in recent years that the NEV manufacturers are showing increasing interest in entering the insurance market to enhance their product and service offerings. These manufacturers can leverage their expertise in distribution channels and data collection to collaborate with auto insurers and create tailor-made insurance solutions for the NEV drivers and users. The manufacturers engage in the insurance supply chain by different ways, I would say. For example, BYD Auto, it is the only automaker in China that fully owns a long-life insurance company at present, while other manufacturers choose to establish or acquire insurance intermediary licenses. This will allow the NEV manufacturers to gain more experience in insurance operations while they can gradually develop their long-term insurance strategies. On the other hand, NEV manufacturers have more data and insights on vehicle characteristics and also drivers' behaviors. While this can provide competitive advantages over the traditional insurers, we're also expecting a closer collaboration between the new joiner, the manufacturer, and the insurers, and to bring fresh ideas and better practices to the NEV insurance market.
That was Aaron Lee, an analyst in the AM Best Hong Kong office. A full copy of the report is available at ambest.com. For AM Best TV, I'm Lori Chortis.